Hi Kush, good morning. Appreciate you joining us here on First Take, sir. I want to
Very
begin
good
by
morning,
asking.
guys. Yeah,
Hi.
my pleasure. Sorry, go ahead.
Yeah. So Nifty, I mean, yesterday we saw a range-bound movement where Nifty was, trading in a range of about 100 to 110 odd points or so. It took support at 19,050 to 60 sort of levels. On the upside, faced resistance at 19,150. But today there was a clear breakout, and we are, I think, currently hovering in that 19,250 sort of levels, which was seen as a resistance level. How is the, how is the index looking on the price charts? What's your overall reading, sir?
So, first up, look, the movement that we saw yesterday was also on account of the weekly expiry, where the 100, 200 call options had a very strong call base, and hence crossing those levels were a little difficult. Otherwise, if you see, the bias was positive, and it's an extremely encouraging sign that we were trading positively. Today we've entered into that zone, which is we call the congestion zone of 19200 to 19500, about 550. We spent a lot of time in this zone from August to September before we sort of broke out and went all the way to 20200. So it's a good thing that we've entered this zone, which means the near term bottom somehow looks in place at 18800. So unless there are any adverse developments from the geopolitical front, I think this level should hold. We could perhaps trade in this range. This could very well be what we've called in our today this morning's advisory report as the pre-Diwali rally underway. I wouldn't be surprised if this extends to 19500, 19550 levels also. So we're in good state. The healthy sign also comes from the bank Nifty, which was facing resistance around the 200-day moving average for the past 5 to 6 sessions. Today there's a gap up
Above it
and we're
today, right?
holding above that, so that's a
Yeah,
good
yeah.
sign, the bank Nifty. Yeah.
And what are the levels that you're tracking? As you rightly pointed out, we have moved above that 200-day simple moving average. Has the trend reversed? Because we have seen quite a bit of bearishness set in for the banking pack overall.
Well, look, let's just see why the banking pack is in a bit of a doldrum rather. Very simple reason. FII selling. FII has been one of the biggest holders of the banking stocks, especially the large names, which is your HDFC, ICICI, even the likes of SBI. So once you see the FII outflows of such strong magnitude, it's going to be very difficult. Despite the mix, I wouldn't say a stellar performance, but the kind of mix set of numbers that we've seen, it'll not be a bad idea to perhaps watch this space a little cautiously and be a little selective. On the upside, since you asked for levels, I think the first level that we're looking at is 43,600, where the 20-day moving average resides. And once that is taken out, we could see a move, somewhere close to 44,300. So a very sharp short covering rally is also due, and a rebound is also due. My only concern is that this strong selling number from FII could perhaps keep the banking stocks and hence the banking index under a bit of pressure. The moment we see the FII selling figure reducing or them turning buyers, this index is all set to outperform.
Now, talking about FIIs, they sold, somewhere around $5 billion worth of equities in the last couple of months. But now that at least the narrative that is coming out from the global markets that interest rates, at least for now, have topped out, do you expect FIIs to return? Because we are clearly seeing, bond yields soften over the course of the last couple of sessions. Dollar index has also pretty much holding on to that 106 sort of levels.
In my experience, this is always a very tricky thing to call, because there are a lot of factors at play when it comes to FII selling. If you just for a minute take out the global story and take out the geopolitical issues that are happening and the bond yields, the India story is still intact, so there's no reason per se domestically for FIIs to sell. Now once these some of these global factors start to at least solidify or stabilize, there is every chance that the FIIs could come back. But as I said, it's just very difficult to pinpoint as to when will they turn around and to what magnitude. So while I'm hopeful that since the India story is intact and the global situation seems stabilizing, we could see a bit of a return of the FII money. But I wouldn't really pinpoint a time or a magnitude to it.
Hi Kush, Amit here. Now, Tata Motors reported a very good set of results yesterday. Profits up 16%, revenues up 32% on the back of the Range Rover Sport and Defender accounting for almost 77% of their order book. but it was well short of the market expectations. The stock right now is up today, is up 2.91%. What do you think that market expectations, as they came short, would hurt the stock in the near term?
Or not, because the stock is definitely up.
It's definitely up, but do you think it is going to hurt because they came short of market expectations?
Sure. Hi, Amit. So my question was already answered. Where if it were the case, then the stock would not actually be trading 2.5, almost 3 points up. We are off high slightly, but again, not by much. I'll tell you, even in the recent past, we've maintained that the 620, 625 level is a very strong support zone. Markets do kind of have an anticipation of what the numbers are going to be like, and hence you did not see the stock break down below the 625 level. Now, even though as you say, there's a miss on certain factors, it should have translated into price action. It's not. Also, I think it's getting the rub off of the entire auto space. That the kind of traction that it's seeing on the upside. So Maruti, TVS Motor, Bajaj Auto, Tata Motors, these are some of the stocks that have actually done well, and I think will continue to do well. So from my perspective, as long as the 625 level is held, the stock should actually see some more upside from here. Won't be surprised to see 700 also on this stock maybe in the near term as well.
Now, Kush, Adani Enterprises was another one which reported its September quarter numbers. The numbers were rather hard for, at least for me, to comprehend. I saw, like, if you see, net profit is down, 50% on a year-on-year basis. EBITDA margins are seen improving. First of all, how are you even reading these numbers? And, given that the stock has corrected significantly, even yesterday, I think we saw, it correct. It was among the top gainers, up about 3% or so, gave up all its gains by the end of the session. But today, I think it's up about, 1 or 2% or so, actually 2.5% this morning. Is the earnings going to play a factor in the stock prices because the business model is so complicated, or is the street looking beyond that?
So thankfully for me, I don't really delve so much into the numbers. Coming from a technical standpoint, what I'm looking at is that the stock's clearly under pressure. Ever since it hit the 2700 high somewhere end of August, it's been on the downturn. The bounce that we are seeing today is more of a technical bounce. The stock had gone into an oversold territory around the 2200 level, but from there on, if you see, it's not even crossing its 20-day 200-day moving average, which resides somewhere close to 2280 levels. So I think the stock will continue to be under pressure. And if I'll talk about the entire pack or the entire group per se, the only two stocks that we really like here are first Adani Power and then second Adani Ports. So Adani Enterprises does not really even fall on my radar. I mean, the price action itself is very clear for me to sort of put an avoid on this. What I would be concerned about is the 2200 level being held. If that is broken out, the stock could actually slip below, and go down as low as perhaps even 2050 kind of levels. So for me, this is a very clear avoid at the moment. I would actually focus on Adani Power if I were to pick something from this table.
Now, Kush, as we are in the thick of the earnings season, another big company that will come out with its results is MRF. I'll come to you on the expectations on the stock later. But Amit, what's the street expecting with MRF?
Well, in anticipation, the stock today is up 0.31% already, and it is on an upward, downward trajectory. But in the last 5 days, if you look, it is on an upward. So anticipation is good, and the car market has done very well. So the street is expecting a higher revenue than 5,826.3 crores that they recorded the same quarter last year, a gross profit of 1,748.7 that they recorded gross. So it is going to be quite a bit of jump from that because this industry has done very well.
All right.
Kush, what are your views on this?
I mean, the stock has been an underperformer compared to, other tire players. As I can see, MRF is on a 6-month basis, it's up about 12%, whereas other industry players are up somewhere from 15 to 20%. 1 year basis, it's up around 20%. Others are up 30 to 40%. India's costliest stock, so to say. What are your expectations there, sir?
Well, I think that could perhaps be one of the factors, playing on the stock. The fact that, there is very little float and very little participation is also one of the factors that is playing on the stock. And look, from my perspective, I think the stock is close to its resistance levels. The bias, however, has just turned positively only recently, and it's not, as you rightly said, not performed as well as the other, tire manufacturers. My suggestion would be, just keep it on your avoid list. If you've got a position somehow, early in the day, then perhaps, hold it with a trailing stop loss. But otherwise, I'd say there are, a lot of other players which have, much better momentum going for them, the likes of Apollo tires, JK tires for that matter. So, those would be my, picks. The stock's actually gone into a consolidation mode. Hasn't been able to take out the 11,100, 11,000, sorry, 1,11,300 kind of levels recently. So I think I'd actually not really focus too much on this one right now. For me, JK tire, Apollo tires, these would perhaps make the cut.
Okay, Kush, now could you give us your top 5 picks for the day, for the markets?
Sure thing. Maybe not 5, but surely a couple of them. The first stock that I have on my radar is Alchem Labs. The stock's actually seen a very smart rebound from the 3,500 level and has gained, in terms of volume, delivery, and price action also. So this was something that we recommended today to our clients in our advisory service also. 3875, 3950 are the two levels that I'm looking at. On the downside, 3700 is where the support zone is. The stock's already about 1% up, but we think this momentum could continue further. One more stock that is on our radar is Manyavar, Vedant Fashions. The stock's actually not seen too much of price action for the last 4 or 5 days. But interestingly, there is a very clear markup in the delivery and the volumes. So this is a very clear indication that the stock is forming a base and all set to move higher from here. So if someone wants to accumulate this stock at the start of the rally, this is perhaps a good entry point. On the upside, 1335, 1370 are the levels that we're looking at on Manyavar, Vedant Fashions. 1275 is where I would place my stop loss. A couple of other names on my radar. CDSL. This stock has been, doing very well, has seen a lot of momentum, but continues to surprise on the upside. And, when the stock's been up, the volume and the price actions have also been fantastic. So I think, this momentum could continue. 1560, 1600 are the levels that we're looking at on the upside. 1480 is where I would place my stop loss. And one stock that we recently, added, as a part of our advisory service is Scient. Strong base formation at 1600, positive bias here. The momentum could perhaps be a little more, but the fact that it's very close to its 20 and its 50-day moving average is perhaps why you don't see as a bigger momentum here. But once the 1680 level is taken out, the stock could make a dash towards 1710 and 1750 levels. 1640 is where I would place my stop loss. So these are some of the stocks that I have on my radar. And as I said, we've discussed these stocks as a part of our advisory service with our clients as well.
All right, that's the view coming in from Kush Bohra. Kush, always a pleasure speaking to you, sir. Appreciate you joining us here on First Take.
Pleasure's all mine. Thank you so much and have a great weekend ahead.